DUBAI Islamic Bank is not just one of the largest stocks on the Dubai financial market, it is one of the most consequential financial institutions in the Islamic world. So is DIB a stock worth investing? Let's break it down properly. DUBAI Islamic Bank was founded in 1975, making it the world's first full-service Islamic bank to operate on Sharia principles across every product and service it offers. It is a public joint stock company listed on the Dubai financial market under the ticker symbol DIB. The bank operates with a workforce of more than 10,000 employees and around 450 branches across its global network, serving over 5 million customers worldwide. Its business runs across 4 segments: consumer banking, corporate banking, treasury, and investment activities, all structured without conventional interest using Islamic financing instruments such as murabaha, ijara, musharaka, and sukuk. This is an important distinction for investors. DIB does not earn interest the way a conventional bank does. It earns profit from asset-backed financing arrangements and fee-based services. So the metrics you use to analyze it are slightly different from a standard bank. Now let's look at the numbers. According to DIB's official full year 2025 results published on dib.ae, total assets grew 21% to 416 billion dirhams in 2025. With 124 billion dirhams in new gross financing and sukuk investments, representing an 80% year-on-year increase in new business origination. Operating revenues reached 13.3 billion dirhams. Pre-tax profit stood at 9.0 billion dirhams. Net financing assets increased 23% to 262 billion dirhams, and customer deposits grew 29% to 320 billion dirhams. Those are not incremental improvements, that is broad-based high-quality growth across every line of the balance sheet. Asset quality is equally important to understand. The non-performing financing ratio improved to 2.65%, down 135 basis points year-on-year. Cash coverage strengthened to 120%, and the cost of risk remained exceptionally low at 14 basis points. In plain terms, the bank is growing fast and the quality of what it is growing is also improving. That combination is rare. Now let's look at the most recent quarter. According to DIB's official Q1 2026 results announcement on dib.ae, operating revenues for the first quarter of 2026 reached 3.5 billion dirhams, up 13% year-on-year. Operating profit increased 12% and pre-tax profit reached 2.1 billion dirhams. Total assets stood at 419.9 billion dirhams at the end of March 2026. The CET1 capital ratio was 12.6% and the capital adequacy ratio was 15.8%, both comfortably above regulatory requirements. One number to watch carefully: net profit margin contracted by 40 basis points to 2.5%, driven by a declining rate environment. That is a real headwind for any bank when global rates fall, and investors should monitor it. On dividends, at the 2026 annual general meeting, shareholders approved a cash dividend of 35 fils per share for the 2025 financial year, equivalent to 2.53 billion dirhams in total distributions. That is a genuine cash return to shareholders, not a bonus share issuance. From a credit perspective, DIB rated A3 by Moody's and A by Fitch. Those are investment grade ratings that reflect the bank's capital strength and earnings resilience. DIB also ranked as the world's third largest sukuk book runner in 2025 according to C-Bonds, a position that speaks to its influence well beyond the UAE market. From an investor's perspective, there are 5 things to monitor closely. First, funded income margin. Watch how falling global interest rates affect DIB's net profit margin, as this is the most immediate pressure point. Second, deposit growth and CASA. Low-cost current and savings account balances reduce funding costs and profitability. DIB has been growing these well. Third, asset quality. The non-performing financing ratio has improved consistently. Any reversal would be a meaningful signal. Fourth, non-funded income. Non-funded income surged 30% to 1.249 billion dirhams in Q1 2026, which shows the bank is diversifying away from rate-sensitive revenue. This is a structural positive. And fifth, international expansion. Cross-border financing assets grew more than 83% year-on-year in 2025, with landmark sovereign transactions executed across Pakistan, Egypt, and the aviation sector. Global reach adds scale, but also adds complexity that investors should understand. So is the DUBAI Islamic Bank a stock worth tracking? The data from the bank's own official results is clear. DIB has scale, a strong and improving balance sheet, a consistent dividend policy, investment-grade credit ratings, and a business model that is deeply aligned with the UAE's long-term economic ambitions. It is not a small or speculative position, it is one of the anchor names on Dubai financial market. The main risk to watch is margin compression in a lower rate environment. Beyond that, the fundamentals speak for themselves. As always, review the latest official financial statements on dib.ae and the Dubai Financial Market Disclosure Portal before making any investment decision. This video is for educational and information purposes only. It is not investment advice or a recommendation to buy, sell, or hold any security. Please conduct your own research or get in touch with a market expert before making any transactions.